Hey everyone, how's it going? It is 1 p.m. on Wednesday, December 20th. We just got the closing bell and we had a really interesting trading day. Well, I wasn't able to really watch, but I did catch the last 10 minutes of it and we had a lot of price movement, a lot of volatility. So that's not unexpected. We did say markets are thinner. We could get a lot of movement, a lot of volatility on thin participation. And if we got a directional move, we really wanted it with a lot of momentum, and we actually got that. So let's take a look at what all of that means. If we look at our intraday chart, you can see that we were up most of the day. It was very, very super strong, but it was strong to the upside and no signs of anything going wrong. And we did break above that purple line that we talked about in the morning, and we did get that momentum push above it. And then for whatever reason, around 11 o'clock or 10:30, we started to sell off. I searched the news. I talked to a couple other professional traders, and no one heard anything. This is just downward movement. And then we got some really sharp movement over here. Again, not on any news. And we traded down so far that we actually moved beyond the previous previous resistance. So I probably shouldn't have erased all those lines down here that I had this morning because I didn't think it would move this far. It's that if it moved, it probably stop at that previous resistance, and it went right through it, bounced back to it, and then came down even further down into the close. So let's see how much movement this is and how significant it really is. If we look on the daily, you can see that we traded down to the EMA 8. If this was going to be a real pullback, we would want it to go at least to that EMA 20, but EMA 8 is okay. You can see that EMA 8 is just matching the lows of this sideways trading range. So we're not going to get too excited about this downward movement yet. It is mostly just chop. It is within the range of a choppy sideways motion, even though it was a very sharp drop in the last couple of hours. It hasn't violated any of these levels yet. So for now, we're going to watch and just be kind of skeptical. Is it going to be a pullback, or is it going to just keep on chopping? Did we get faked out, or are institutions trying to fake us out? Algo's trying to fake us out, or is this going to be a real pullback? So if I look at my +3 Keltner channel, or my Keltner channels, we moved from +3 down to about 1.5. So we're not quite at 1. So if this is going to be a pullback, we do have at least a little bit more to go. But the real corrective pullback that I've been talking about for a couple of weeks now is at least to EMA 20, if not a little bit lower. So right now, like I said, we can't really say that this is a pullback yet and get too excited that we're going to go down to that EMA 20. And there's another clue that might not be the case, but let's take a look at a couple other things before we get there. Take a look at the QQQ. QQQ did something very similar. It just pulled back to the EMA 8. The Keltner channel went from +3 Keltner channel down to a little about 1.5 to 1.75 ATR. So we're really in the exact same boat in QQQ. Let's take a look at the Dow Jones. The exact same thing, pulled back to the EMA 8, and we are still sitting very high, halfway between the +2 Keltner channel and +3 Keltner channel. So if this is going to pull back, we really would expect it to move even more than it has so far. So far, everything is just pulled back to the EMA 8, and that's still really strong. So, and it hasn't, again, we're still in this sideways range, so we haven't violated anything yet, and it's too early to say that we're actually getting a pullback. Now, the reason why I'm even more skeptical is because if I look at bonds did not participate. They continue to move upwards, so up another 0.70%. If bonds are moving upwards, yields are coming down, then the natural effect that we would see is a boost in interest rate sensitive stocks like the home builders, the tech, and for sure tech we saw come down with the NASDAQ. We can check real fast with XHB. It came down, still came down, not, down 1.08%, but still just chopping sideways. And if I look at XLRE, Same thing, down to the EMA 8. So even all the interest rate sensitive stocks that should have gone up because the bonds went up, they all came down. So it is a little bit more likely that we're playing some games here. We've got some institutions playing some games, trying to fake people out. The other interesting piece of news, of data that I did not verify for myself, but one of the traders that I talked to was saying at the sell-off, at the end of the sell-off in the last, so I spoke to him maybe 10 or 15 minutes before the close. He was telling me that he saw a lot of call buying in Tesla and AMD, like huge amounts of prints of order flow in those names. I didn't have time to verify it for myself, but that guy basically only trades order flow. So if he says that that's what he saw, that's probably the case. So that's just another clue that institutions are just trying to play with us, or algorithms are just trying to play with us, and we could get caught in a bear trap. So anyone who panics or who panicked during this sharp drop off, and it looks like we're very weak into the close as well. It broke this kind of support that we had right here. Then tomorrow, if we look like we're going to open even lower, we could be in for a surprise. We could be in for an upward swing right there, just because a lot of people got caught off guard and they go, oh my gosh, we're finally having that pullback. Oh, we've been at such elevated levels. We've been overbought for so long. And then because we are on such low volume on the holiday, going into the holiday week, that it's a lot more easy for these institutions to manipulate and fake us out like that. So we want to be really, really careful. We don't want to be too excited about this pullback, or this, it's not even a pullback, just this downward movement, this sharp reversal that we had in the last couple of hours. This type of stuff is exactly why we do the hedges. So I don't know what happened to my trades in here, but we had a VIX hedge and a DIA hedge in here. I don't know what happened to them. So I'm going to have to try to figure out, see if I can get them back somehow. But in the last week, we talked about a VIX hedge and a DIA hedge. Those would have worked really, really well for us today in balancing out our portfolios, so that we personally wouldn't have to freak out, even if we were not certain that this could be a bear trap. So I'll give you a couple of examples, because I did do those trades live as well in a couple of our portfolios. So luckily, even though we don't have them saved in here, luckily I do still have those examples for you. And so the first one I'm going to show you is that VIX. And then we can go over here and just see exactly when it was traded, because I don't remember. So this was on December 14th. We traded a VIX call just to get another hedge in. And we can see that that VIX call is up 65%. So that's a nice balancing effect. If I had a few longs and then they got hurt by this downward motion, well, the VIX call would have balanced that out, and then my portfolio would be okay. Another example is right here. So we have DIA. Okay, we have a DIA hedge, and it looked like it was going against us, but we were okay with that because it's just a hedge. We were willing to lose $100 in order to be protected. And that protection came in handy today, because now that position is positive 20%. So by putting in $100 and be willing to lose it, it's helped protect our portfolio over here. The other thing that we talked about was balancing out our positions, going into really strong stocks onto the long side and really weak stocks to the downside. So that's exactly what this portfolio is. This is a $2,500 challenge that I started for myself at the beginning of the month. And we have balanced positions. We have a short in AWK, a hedge in the Dow Jones, a short in FE, or at least a put, long a put, which is the same as short. We have a short in Kellanova, And then we have longs in HSBC, MSI, Oracle, and WMB. And what you see is that over here, the longs, they lost money today, but look at the shorts. The shorts made money, and the shorts made so much money that this portfolio is up $228 on a $4,500-600 account. It was $4,400 this morning, obviously, but on a $228 divided by 4,400. So the whole portfolio is up 5% today on that sharp drop. The really interesting thing is that earlier today, before that sharp drop, when there was big movement upwards, the shorts were losing money and the longs were making money. And at that point in time, the portfolio was still up $150. So when the market was up, the portfolio was up $150. When the market sold off and went down, the market is up, the portfolio is up $228. So it didn't matter which direction the market went, the portfolio still performed. And that's the art of portfolio management, and why you hear us say things like, it doesn't matter what direction the market moves. We don't care what direction the market moves. I don't even care what direction each one of these move individually. I don't care that this one lost 48%. I'm not going to freak out by it, because as a whole, they all balance out. And with these market movements, then the portfolio itself continues to make money. So I'm going to have to rebalance this, because the hedges and the shorts did their job and the longs lost their money. So I'm going to have to rebalance this tonight. But that's the art of the portfolio management. We keep on rebalancing so that no matter what, if we have these large market moves, our portfolio still does really well. That's a slightly different story if the market just keeps on chopping sideways. If the market chops sideways and our portfolio chops sideways, then you just have random amounts of gain or loss. So for when we were chopping sideways, this portfolio might have lost $50 today, made $60 tomorrow, lost $70 the next day, gained $80 the following day, and they would just chop sideways with the market. But when there's a big move, we're protected. And we're not just protected, we make money either way, whether it goes up or it goes down. So this today was a really great example of bringing a lot of the principles that we've been talking about the last 2 weeks or 2 or 3 weeks together. So we have a few different approaches. We hedge the entire portfolio. That was the example of the diamond, the DIA trade and the VIX trade. Or we just construct our portfolio in such a way that it can take advantage of movement no matter which direction that it goes. So if you missed any of the lessons on the hedging or the construction of their portfolios, just review some of the videos over the last couple of weeks. And hopefully by the time you get to today, you can see how all of that is constructed together and just really balances everything out so that you can consistently make money in the markets. Okay, so that's all I've got for today. It was an exciting day, good example. Tomorrow, we're not going to freak out. We're not going to say, oh, we're getting that pullback that we've been talking about. Maybe, but there are some signs that are making us skeptical, and we're just going to wait and see. If we open down tomorrow, then normally we have a 70% chance probability that we'll head up towards the previous day's close. So if we open down, that could be enough momentum for us to start moving up and correct some of this. So then in that case, it just becomes choppy movement again. It's not actually a pullback. Or if we see continued downward momentum and pressure, then that would be the pullback. But given all the calls that were placed at the end of the market, I'll go and look at data and verify it for myself before tomorrow morning. But if those are there, then that means most likely institutions are just playing this bull trap or a bear trap game with us. So have a wonderful day. I will see you tomorrow, and we'll see what other excitement the day brings. All right, see you guys.